Hi there, a very good afternoon to all of you, and welcome to this live session, the Saturday live session, and the second live session of the week. And today I'm very excited to present to you a couple of stocks from the pharma sector because a lot of people have requested me for some of the pharma stocks and the pharmaceutical sector as it is back in trend. I'll also discuss about announcement about Kilpest, which I have posted also for the viewers. So I'll discuss about that. And before everything else, I'll discuss about the markets and give you around three reasons why market could go up from here and three reasons why market could go down from here. And you can take your pick because I'm flabbergasted seeing the market at around 9900, and I stick by my theory that the numbers would not come in, and probably we will see something like 7,000 on the index. We should see 7,000 on the index. So I'll discuss about the markets as well once a number of people join in. So the three sections of this live session would have markets. I'll discuss about the markets first of all, then the three stocks that I have talked about. So the three stocks that I'll talk about would be Kilpest, the second would be Aurobindo Pharma, and the third would be Pfizer. A lot of requests have come in to talk about Pfizer, so I'll discuss about those. And in the third section of my live feed, I'll answer your queries. I'll take your queries up, whatever queries that come up during this session, and whatever queries I could take it up, that I'll take up in the third segment of this live session. And thank you, Mr. Rajput, for requesting me to do this. So this is a better way, I guess, of continuing with the live session, that I structure it in a manner so that everybody understands as to what is coming up. And next, uh, I would like to know your opinion. So kindly put it in the comment box as to what you feel the markets would be doing going forward. Um, will it fall from now on as the extension of the lockdown has taken place, and so on and so forth, or will it still go up? So I am here with three reasons, and I'll discuss that in a while as to why I believe that the markets could go up and also can go down, the reasons for that. Before I do that, kindly subscribe to my channel and hit the bell icon so that you can get my videos straight away when I post it. I seldomly request this, but I do it now because I see a lot of people going through my videos and not subscribing to my channel. It just requires one click and you subscribe to the channel. So kindly do that. Also, I'll also in the midway of this conversation discuss about my Patreon website. Uh, and I'll share the link with you on Patreon. Even if you become a $2 member, you can ask me a number of questions with respect to the markets or individual stocks. And if you take a better membership, then you'll be able to also gain traction with your portfolio, and I can help you with your portfolio, or making your portfolio, educate you in making the portfolio. I can make a standard disclaimer here that I'm not an NSC BSc certified member or an analyst, so take that into consideration. Plus, I have, if you can email me, then you'll be able to get different ways of payment apart from Patreon, in which you could help the channel grow further. So you can email me on the email address that I mentioned in my videos. Adding to this is that if you want to ask me questions midway through my discussion on stocks and the market, so you can do that through super chat and super stickers, and uh, I'll put this into priority, that I answer your queries before I'm doing my session and doing explanation on stocks or the markets. So all said and done, let's start with the analysis of the market. First of all, the market closed around 9900, 9850, 9900 thereabout on Thursday. We have a long weekend, that is from Friday to Sunday, and probably that's why the selling came in the last 30 minutes, last 1 hour of trade, and the market was set to go beyond 9900 and closer to 10,000 if probably the weekend was not ahead of us. So that's one point. And now the 50% retracement that everybody is talking about of the fall that took place from 12,400 is at around a 98, 80, 9900 or so. And in my opinion, this is a huge resistance. This is not a small resistance, this is a huge resistance. And I believe that in the coming few months, we will see a lot of, you can say, volatility around these levels of 9900 to 10,200. uh, if you look at the trajectory of the markets when it tracked beyond a 6300 from 2014 March April, then you will see that the markets have randomly moved up or relatively have moved up in a 300-point band when it was pretty stable. So 6300, 6600, 6900, 72, 75, 78, 81, 84, 87, 9000, and so on and so forth. Taking all that into consideration, you come to 9300, 9600, 9900, and 10200. So we could be in this band of 9900 to 10200 going forward, unless a lot of things change on the ground. Now, I was really grappling with this thing as to why the market has gone up, and I must say that I was wrong, and I'm not God that day here. I predict and everything comes out true. That I was hoping for a 7,000 market by end of May. Probably it would happen in the next 1 month. We could see a complete turnaround in the markets. But considering where the market is at the moment, and with whatever is happening on the ground, it seems that the market is completely dissociated with whatever is happening around us. So taking all this into consideration and having a, you can say, stable analysis and an unbiased analysis, I have come up with three reasons as to why the markets could go up from here, and three reasons as to markets why the market should go down from here. And you can take your pick of which side you are in, or which of these reasons are most categorical in that regard. So this is my analysis. Again, standard disclaimer applies, and do your own analysis before taking any call on the markets. But markets could go further up because of these three reasons. Number one is they could have priced in very difficult situations at 7500. So they could have priced in a complete washout of FY21. They could have priced in a situation in which you would have the lockdown continuing till end of August, end of September. But we don't know whether at 7500 markets have priced all that in. Adding to that, the market went up in the last 1 week or 10 days. So maybe the markets believe that, okay, one more lockdown and some of the industries will open up, and another one may come up, and might be from June onwards things would be better, and so the markets will keep going up. So that's one point. The second reason why I believe uh, the markets could continue to go up is that the situation has changed globally. So what has happened is France is coming out of a lockdown, Spain is coming out of a lockdown, UK, that's the UK government statement that probably they have reached the peak, and probably the peak will be reached in the next 1 week, 10 days, and things would mend after that. So Europe might be coming out of the troubles at the moment. US and the US government believes that the complete lockdown thing that, or nearly complete lockdown thing that was happening may not continue going forward. So again, industries will open up. And the most important thing is there are trials going on to find a vaccine as well as a drug for this thing. So uh, this is a strong positive. Many Indian companies are into it, and I'll talk about one of them in this discussion. Plus, we are seeing that remdesivir, the drug from Gilead, that is doing well. So probably in the coming future, we could see that come up as one of the drugs. We don't know yet, but things are moving and moving quite briskly in this front, and markets would love this. For instance, if there have been negative news on this front as well, and every drug or every trial would have been wrong and nothing could have gone forward, then things would have been even worse and probably markets would not have liked. So that is the second reason why markets could still be cheerful even after this extension. The third reason I believe that why markets could still be fine and could go up is because I believe that the pharma stocks will hold the fort and may still give some semblance of stability to the large cap indices. And Reliance Industries, with the kind of results that they have shown up, and I have mentioned that in the videos as well, might still continue to go up, might not fall that much. So that would give stability to the markets. So I believe these few stocks, a few in the pharma domain as well as Reliance Industries itself, the big boy of the Nifty, might still give a very good traction to the market. Although I still believe that some of the mid and small cap companies that have run up a lot might still fall a lot in the next 2 3 months. So these are the three main reasons that I believe that the markets could end up going further up. And what do you think about it? Kindly put that in the comment box, and I'll definitely look at it afterwards. But these are some of the points that I have come up with why the markets could still be stable even after this extension. The three reasons or the bear case scenario as to why things could get even worse, and one of the reasons I've already discussed many times, are valuations and earnings dip. So the valuations at 9900, I come back to it. The earnings would be around 450 rupees. At 9900, you'd be trading at something like 22 times, which is extremely expensive. So at 9900, you're trading at 22 times current earnings. FY21 would be worse. I don't think 450 will hold. I think it will dip to 420 or 430 rupees. So this PE would swell up even further. And in that respect, I believe markets should trade at between at max 17 to 18 times. So there's a good chance of a 20 to 30% fall from these levels. Second reason why I believe that we could see major fall in the market is the long-term catastrophe of for the economy, what has been taking place. So if the markets look at it in a scenario of 2 years, 3 years down the line, with the kind of unemployment rate hikes that would be faced by India, and the kind of problems that have been faced by the lower income and the poverty-stricken population of India, is this is going to percolate down to the top tier, and we could see really demand slowdown. We already had a real demand crunch earlier, and we could see a real demand slowdown going forward, say in the next couple of years, next 6 7 quarters, because people would lose job. And I know some of my friends who are losing jobs at the sales level. They work in marketing and sales of some of the companies. They are losing out. There are companies which are run by individuals or entrepreneurs, very small entrepreneurs who earn probably few lakhs in a year. They are shutting down and they are now retrenching, and retrenchment is going on, and they might be going back to, so if they had employed something like 6 7 people, they might be going down to zero, and might still start again 6 8 months down the line. So things are not really great on the ground, and this is why I believe that in the long run we might not see such exuberance that we are seeing in the market for sure. So this is my second reason that I have brought forward. The third reason is, of course, extension with this lockdown, and I believe that we could see a further extension. So people were talking about in April that no, this thing will open up and the economy should open up. So the government is pro economy, so they'll open up the markets. With the kind of numbers we are seeing on the cases front, I think there could be further extensions, and that would lead to a complete washout for FY21, and probably that will deter the market going forward. So, in my opinion, these three reasons of higher valuations and the earnings dip. So, valuations will keep on increasing and earnings will not come. The long term impact of such a situation that has been faced by India today, and continuous extensions of this lockdown may end up having the market eventually fall like nine pins. So we could see the same kind of catastrophic fall that we saw in February. A market could fall down 10-15% in no time. So that is why I'm trying to warn the investors here that things could really get very jittery. So these were the three reasons pro and against the markets at 9900. It is currently at a very interesting point at a juncture where it could really be fine above 10,000, 10,100, or it could go down big time, something like go down 10-15% from here. So let's see what happens, and I would like to know your opinion in the comment box. Kindly put that through as to what you believe markets could do. So after the market analysis, let's discuss about stocks, and let's give you the breaking news about Kilpest. And I just put in the link there. So what Kilpest has done is this. So Kilpest has come out with a statement on BSC yesterday, and they had said that in continuation to our update of 2nd of April 2020, in which they got the approval for testing kits for COVID-19, they have said that they have already like sold around 90,000 of the 105,000 tests that they had prepared. And mind you, each test costs around 800 to 1100 rupees. So you can take that forward, and so they have sold around 90,000 already, around 7 crore of business done. And currently we have around 200,000 test order in hand, and further orders are coming in daily. So many government tenders are under consideration. So they have applied for many government tenders. uh, they already have around 200,000 tests of business available to them, which I think they would do in May. So this whole month would go in for the 200,000 tests. And there are chances they'll get further approvals from other government agencies, hospitals, etc., and for other testing kits as well for other, you can say, illnesses. So this is the crux of that statement that have come in a two-page statement. That and the best of all is they are going to do what is they are going to extend their capacity or increase their capacity from 5,000 to 10,000 kits, as they were mentioning earlier, for the quarter. They are going to do 50,000 tests a month. Yes, so they have told in this statement that they are paving the way to do around 50,000 tests per day, or produce 50,000 tests per day to distribute to hospitals so that it will be done. So this is a huge positive for something like Kilpest. And what that means is if they get this through, they already have 2 lakh tests uh, in, you can say, pipeline. If they sell at 800 rupees a test, then this comes down to 16 crores already, and they have done a business of around, I would say, they've already done a business of 7 crores. So around 23 crores of business would be done in these 2 months. And mind you, this is only for the 22 days. So probably they started selling on the 8th or 9th of April. So in my opinion, around 20 to 23 crores of business would already be done. And let's see what happens in June. So considering all this, yes, the stock has not gone up, but we are looking at fundamentals. We are here, people who invest for the long term. The company does sales, you would say, a quarterly sales of 6-7 crores, an yearly sales of around 20-22 crores, and just in 2 months they'll do a sales of 22 crores. So you can imagine. So we could be headed towards sales of around 40 crores for this year, 35 to 40 crores for this quarter, I'm sorry. And if this continue for say the next something like 1 month or so, probably if this continue for another quarter, then we could have a very big number on the sales front and profitability front from Kilpest. So this was the update that I want to give with respect to Kilpest. At this moment, I would like to just request you to kindly subscribe to my channel and hit the bell icons. You can get more videos such as this, more live feed on different stocks and analysis on the market, etc. Just free if you just subscribe to my channel. Also, kindly look at my Patreon website, and once you do there, just for a small amount of contribution on your behalf, you'll be able to get a lot of exclusive articles there. Some of the breaking news that I put forward here on YouTube gets first there on Patreon, and you can be a member there for $25, and I can help you build a portfolio in that regard. Also, I have started with UPI payments, so you can request for that once you email me, and so you can do UPI payments as well if you want to help the channel grow further. The second stock that I wanted to talk to you about is Aurobindo Pharma, and a lot of things have happened in it. I want to talk to you about these two, you can say, pharma companies, which are Aurobindo Pharma as well as Pfizer. In Aurobindo Pharma, I believe that a lot of things have happened. So from 300, 350 rupees that was trading at, we have seen Aurobindo Pharma go to 650, 660, and the reason has been pretty clear that one of their Hyderabad plant, which used to make the injectables earlier, was banned 2, 3 years back. And since then, they were not able to export from that unit, although they were able to sell in India. So, because of that US FDA ban, a lot of, you can say, dollar revenue from that business, some major percentage of it was not coming in, and so the earnings were very depressed, and the markets didn't like it, and the stock fell from around 700-800 all the way to 400 or below that. They have got the approval again, and they are now selling into the US markets those injectables from April, from this quarter. And look at the stock movement, so it is at 660, 670. Positive about the company because other businesses of theirs for Europe and for Asia Pacific as well as in India have been doing well. They are it is a marquee, you can say, pharmaceutical stock. So one can definitely safely look at the stock with a strict stop loss and do your own analysis and then get into it. But in my personal opinion, the stock is very well poised for a bigger up move than what it has already shown at the moment, and a consistent return of 18-20% can be gained in the stock for the next 2, 3 years. So everybody was asking me to pick some of the pharma stocks that I could pick, and one of them, although I like, and I can make that statement again, I like Divi's Lab, Dr. Reddy's, and Ipca Labs, but Aurobindo also fits the bill in that regard after what has gone on. So clearly, I agree that Aurobindo Pharma could easily go towards 800, 850 levels from here in the next 6 months or so. Kindly do your own analysis and invest into it, but looks good, the company. The third stock I want to talk to you about is Pfizer, and Pfizer is one of the stock that uh, people try to move away from because of its high per se price of around 5,000 rupees, 4.5, 5,000 rupees a share, and a pharma company. And add to that, it is expensive at 40, 43 times earnings at the moment when the markets have fallen. But you need to understand that these are multinational companies, these are MNC companies into the pharmaceutical domain. They are not Indian companies selling abroad. So Pfizer is also listed in US. Pfizer is in Europe as well, and Pfizer is a global giant in pharmaceuticals. It is not just a particular Indian company which is selling globally. It is a global company that is listed here in India, and that's why the valuations is high. So that is about the valuations. Now, second point is I was looking at Pfizer and the charts of it and everything else. I believe that the stock is poised for a huge up move above 5,050, 200. That's one thing. And the reason why Pfizer has shot up over the last 2 months has been this. Uh, Pfizer has gotten into a tie up with a company in the US to manufacture drug for COVID. Now, this is big. So, what has happened, and this is a news that I have taken up from the websites out there in US. is that it is one of the pharmaceutical company in terms of market cap, and Pfizer stock could soon experience an upswing after linking an agreement with BioNTech, BNTX, that's the sign of BioNTech and listed in US, to develop a coronavirus vaccine. So it has tied up with uh, a US firm, and the two companies penned a deal on March the 17th to partner on a coronavirus vaccine to get targeting COVID-19. So this is something which is big, and probably if they come up with it, then you could see manifold return in the stock. Adding to that, the pharmaceutical company has also gained the FDA approval to sell a rare heart disease drug. Now this is a very rare disease drug. Overall first quarter earnings and sales, although these earnings and sales dipped, and this is the first quarter earnings for US or the last quarter earnings here in India. The March quarter earnings dipped for Pfizer, but this drug approval for heart disease, that approval to partner with a US firm in order to produce the drug for or you could say the vaccine or drug for this illness, could go a long way for the company to go even further and higher. So this year, FY21 could be big for Fiverr, not only in terms of earnings, but when I was looking at the charts, it was looking good. And I believe that once it crosses 51, 5200, it could really surge towards 7000, So kindly have a look at Pfizer in detail and then get into the stock. So these are the stocks that I wanted to talk to you about. Um, Now I would like to take up your queries, and again I would like to request you that kindly support me through super chat and super stickers. And once you do that, I'll be able to answer the questions in detail, and it comes on the right hand side window for a longer period of time, and you would help me grow the channel as well. So the first question, and here we go. So Hushi Rao, thanks a lot for your super chat contribution. How many stocks should one consider to buy in a portfolio? That is the question that has been asked by. I have around 45. So, yes, 45 is huge, Hoshi. So, I would suggest most you could have is 15, but even I believe that is on a higher side. The best is 7 to 10. And I'll just explain you the reason. The reason behind it is that when you put in 45 stocks in your portfolio, it is a 99% chance that half of those, or at least 10 of those, will not perform at all. Once they will not perform at all, and no matter what other 35 would do, even if they grow at 20-25%, if these 10 go down 50-60%, you don't make any money on the complete portfolio. And that's why I believe, yes, you should not take risk with say 30% allocation on one stock and you buy three stocks. But what you can do is probably have 10% allocation on each stock at max, and have 10 stocks in your portfolio, or at max 20 stocks. But in my opinion, if you're buying safer stocks, larger stocks, then 10 12 suffices. In some of the stocks you can put in more money, in some others you can put less. If you email me, and I'll be able to help you in detail with respect to your portfolio. um, Sai Charan, thanks a lot for your contribution. If you have any question, kindly shoot it directly to me, and I'll answer immediately. uh, Again, I want to say that in terms of this, I have received many portfolios through email. And in those, there are 20, 30, 35, 40 stocks. And really, it won't help you gain a lot of, you can say, percentage gain on an overall portfolio basis when you hold them on a longer period of time. It's better to look at, and also when you have 10, 12 companies in your portfolio, you'll be able to track them much better with breaking news, etc., rather than having 45 stocks and worry about those five which are very bad, and not looking at the other 7 8 which are good. So maximum, buy those stocks. It's like buying companies. So buy those companies which you are able to analyze quarterly, at least every 3 months, and analyze very well. So apart from working, you should have enough time to analyze the whole of your portfolio in order to make big money. Otherwise, you would be in trouble always in the longer run. That's my opinion. Okay, so it's great to see you. So a lot of questions are coming in, and I'm missing out on many of them. LNT technology is good, but LNT Infotech is even better, and I made a video on that as well, and it was in part of my you can say best picks. So get into L&T Infotech. That would be a better option than this. Now, I want to again say a lot of questions just passing by. It's better that you ask me through super chat, and it would be better for me to answer. Uh, okay, so Ajanta Pharma, in my opinion, is good, but better to look at larger pharma companies, as I mentioned. So something like Aurobindo, Divi's, Dr. Reddy's, and so on and so forth, or diagnostic companies for that reason. Tata Elxsi is good. I believe Tata Elxsi at current levels is attractively priced. If you buy at lower levels, it would be even better. Thanks a lot, Vineet, for your contribution. Is Just Dial good stock for long term? No way. Kindly stay away from Just Dial because of its, you can say, a lot of issues with respect to corporate governance and so on and so forth. I believe that it's better to get into other technology firms that I have talked about on many occasions, rather than going ahead and buying Just Dell, just looking at their price of 5 6 years back to get into it. Avoid it. Uh, NBCC, I like the company, but again, the numbers have to come. The business has to grow, and with the current situation of the economy, I believe one should avoid NBCC. But if you really are a risky player, if you want to invest for 6 7 8 years and don't want to make any returns for the next 2 3 years, then only get into NBCC. It's a very risky trade. You'll make no money in the next couple of years. That's what I feel. But over 6 7 years, it can definitely get 4 5x return. Yes. Tech Mahindra is good, but then there are other companies in the consumer domain which are coming at 30 40% discount. So kindly get into that. But for a safer bet, yes, Tech Mahindra would be a good stock to get into. Yes. Syngene is a good company. So yes, you can buy Syngene with a stop loss of 20 25% downside, and then trade into it. But Syngene for a longer time term is good. Biocon is good as well. So but you can look into it. Okay, so the chemical companies, I want to just make a statement here. Some of the chemical companies are good. I want to again specify some of the chemical companies that I mentioned on many times. Vinity Organics is really good. Sudarshan Chemicals is one that I like. The other chemical companies in the same domain, which a good PI industry for that agrochemical space is good. Pidilite, for that matter, is something that you can look at, but not all chemical companies would do. SRF is good as well. SRF is one of the companies that I like for a longer period of time. Titan is really good for long term, and in fact, at these levels of below 1,000 rupees, if you can get Titan and keep on adding for the next 4 to 6 months, Titan should give you very good return going forward in the next 4 5 years. Once the economy opens up, all these companies like Titan, etc., would really do well because the prices have gone down appreciably. UPL has gone up, so around that their business is not affected because of the current situation that is prevailing, and they are doing pretty well globally as well. And so the stock has run up a lot. So any correction of 10 15% would be good opportunity. A very risky trade would be in something like NBCC at 20 rupees or round about that, but otherwise avoid these companies. One more thing is that whenever you're choosing a company, you need to first look at what are their numbers like, how the company has grown, how the market cap, and invest. So for instance, Reliance better than many small cap companies. taking this forward, taking into consideration a Larsen and Toubro, which has not performed well since 2008-9, it has not done appreciably well on a consistent basis. Although it has been a large cap company, but many small cap companies, as I explained, or outgrow some of the you can say the market. So I don't think DMart would be affected that much. DMart's market is pretty set at the people in South India, more or less South and West India. They are beginning to start up in northern part of India as well, slight effect on their business for sure. And I do not think DMart should be trading at 120, 110 times. And that is why I have never recommended that. So DMart should do well. Again, valuations are very rich when you consider its stock price at the moment. HDFC Life is good. I like HDFC Life, particularly after the through churn going forward. So wait for declines to get into such companies as come up with a video later on. Sure. Avoid BEML and ITI. All right. So, all right, guys, thanks. Vary on any stock or portfolio, and let's see what I can do for you. Thank you for watching. And standard disclaimer applies that I'm not a BSc or NSE certified member, and kindly do your own due diligence before investing to any companies or recommendations or education. Through education, I talk about any stocks. Kindly do that with your own due diligence and you can say consulting with your financial advisor. Thank you.